Thanks for joining us for today's episode of the Rock Island Wealth Management Spotlight. I'm Mitch Stoba, President of Rock Island Wealth Management. Today's Spotlight is on Senior Vice President Jeff Campbell with Fidelity Bank. Jeff, tell us a little bit about yourself and Fidelity Bank.
Thanks, Mitch. As mentioned, Jeff Campbell, Fidelity Bank. I've been with the bank for 17 years. The bank is a commercial bank focused on small businesses and their owners. Our definition of the small business would be roughly 100 million and below in revenue. These are businesses of all industries and typically based in the Twin Cities or greater Minnesota.
Awesome. Thanks for joining us again today, Jeff. Hey, so what are some of the biggest questions that your business owner clients are asking you today?
Well, the biggest thing I keep hearing from our clients is always revolving around people. They simply cannot find talent at all levels of the organization, from the customer service to production floor to engineers to skilled labor, and it's really becoming an issue for the companies as they plan for growth and as they make decisions about their business. Recently was visiting a manufacturer in northern Minnesota who was experiencing tremendous growth. However, as they were analyzing the decision to whether or not to go forward with a big production expansion, the number one criteria for them to make that determination was, could they adequately staff it? Sales were up 20%. The need was there. The fundamentals made sense to make the expansion happen. However, could they staff it with quality people in order to prove their model? So the access to skilled labor is really a big issue, skilled and unskilled, and it's really a big issue for the country. I'm finding it particularly with contractors that are looking for skilled labor. It becomes a big issue for them as well to manage growth, to execute on projects, and that becomes a real issue as they have to run things a little tighter than they wish they could because the growth and the opportunities are there. Now, one thing where that's impacting the bank is the decisions and the conversations have moved from more of a focus on automation and efficiencies in order to deal with the labor crunch.
Sure.
So a lot of the loan requests, for example, have been to perhaps reduce their labor costs, not because they're trying to shrink, but because they simply can't access the talent. And it would be more of an automation or an efficiency decision as they're investing in technology, investing in equipment at their plant that might consolidate two pieces of equipment into one, or to make their plant more efficient in terms of the layout, the storage, for example, material handling, all levels of the business, again, driven by the labor crunch, which is a big issue.
Sure.
I think it's impacting most every industry, service industries, manufacturing, contractors, and the decisions that these business owners are making are really geared towards lean and mean, automation, and efficiencies. And as a result, the conversations with the bank have been geared more about how can we be more efficient to manage our growth, meanwhile trying to manage through a very tight labor market.
Sure. Automation is important, and that's great that you're helping your business owner clients out there. The other thing that's important is security. How are you helping clients out today with security and fraud prevention?
Yes, another big topic, and also can fold into the automation discussion as the bank's looking to help companies automate and be more efficient. Security and fraud prevention, daily issue at the bank. Fraudulent wire requests, fraudulent checks, other issues, internal fraud amongst the clients, just a key focus of the bank, and we're really trying to educate our clients regarding their own internal processes and their own segregation of powers within their organization, but also if there's any tools that we can provide at the bank level with their day-to-day banking that can help with their security. For example, there's products such as dual authentication for transactions that would be initiated at the bank. There's products called Positive Pay that would identify any check that has been pre-approved that can clear the bank, and if something were to hit, it would be flagged and identified, and then we could contact the client to determine if it's a good item or not. The main barrier that the main tool we try to utilize is, it's really the human element. And we want to get to know our clients, and as we get to know our clients and work closely with them, we're able to identify if something doesn't feel right. And for example, most of our wires, we have a number of steps to approve a wire going out, including simply calling up the client and getting a verbal authorization. It may seem like more work, but really it's a vigilant effort on our part to protect our client and protect their money. So the tools of the old-fashioned human element, along with technology and products that the bank can provide, that can really help clients with the security and fraud prevention on the banking side. We're also trying to just share best practices that companies can utilize internally, and those can be very simple as well. So if augmented by the banking tools, if they focus on their internal processes, segregating duties, make sure that there's checks and balances within the organization. If they're doing those, they're really ahead of the game compared to most business owners. But I think a lot of folks are really taking that seriously now. It's a daily issue at the bank.
Sure. That's great that you're helping them out. I'm sure there's a lot of stories that you could tell us about different fraudulent attempts. Talking about small business owners, what's the lending environment like out there today?
Well, I'd say the lending environment still remains very competitive. Credit is available and accessible for business owners. There's been some consolidation in the industry, and we'll see how that impacts the market here locally. But my take on that is these banks aren't coming in from out of state to not grow and take market share. So I think that'll even fuel the competition even further. From a business owner's perspective, again, there's access to credit, a number of institutions that are really out there looking to grow. If they're running into any issues accessing credit, I think oftentimes the hurdle in that regard can be they simply don't have solid financial reporting or accounting internally, and that can oftentimes create issues accessing credit. So we've been spending a lot of time with certain clients just upping their game, whether it's internally or using outside resources, so they can demonstrate, hey, what's your cash flow look like for the next few months? What's the budget, a realistic budget, look like? How does this impact your liquidity or your capital expenditure planning, etc.? So really the access to solid financial information would get business owners well ahead of the game and is really going to improve their chances to access credit. Again, it does remain very competitive, but if there's one hurdle that usually can be an impediment to the business owner, it's their financials don't make sense or they don't have a good grasp on that. So we've really been working hard with clients and prospects to make sure that they just have solid internal systems so they can demonstrate good numbers that make sense, whether that means internally or through outside resources or an outsourced solution. And then it really provides a lot of clarity and visibility for the bank.
Jeff, I'm sure it's important to get all that right information when you're talking about looking at lending. Talking more about small business owners, what type of SBA programs are out there still today?
Well, the SBA can be a good option in the right circumstance for a business owner. And oftentimes, the idea of using the SBA can scare people off. They think it's a lot more work and additional costs. There's some truth to that, but for the right circumstance, it does make a lot of sense. One program that at the bank we're really a big fan of is specifically focused on owner-occupied real estate, either typically the acquisition of real estate or potentially the refinance of real estate, and that's called the SBA 504 program. So that tool, for example, provides the ability to go up to 90% loan to value on a real estate transaction, where the bank would fund 50% of the deal, the SBA would do 40%, and then the equity would be 10%. Therefore, the borrower can preserve their liquidity while only having to come up with 10% of the equity. The SBA's portion of that loan is actually a fixed interest rate over 20 years, which is attractive to the business owner to help hedge their interest rate risk potentially. And it just gives them more flexibility with their real estate transaction in particular. The other programs make sense, I would say, under the right circumstances. And we don't necessarily use the SBA, lead with the SBA or use it as a first solution. But if there's a particular softness in a credit that could be looked to be augmented by utilizing the SBA, then it can really make sense. It might be able to stretch out the terms for a borrower on a transaction, might have them get the ability to go higher on a particular type of collateral, for example. So under the right circumstances, it can help bolster a softness and access more credit for the borrower as a result. So it's just another tool, another option. And again, if it makes sense under the right circumstance, the SBA can be a good solution.
Jeff, you just mentioned real estate. What are some trends out there in today's commercial real estate market?
Well, it's been an interesting market, I would say, in real estate over the past few years. The multifamily had been and remains, a hot spot. You see a lot of, particularly new developments of multifamilies, apartments as you look around town. So the multifamily segment seems to be a real hot one. The real estate market changes really quickly, it seems like. And there are some ebbs and flows, and it's really interesting to monitor how these things work. For example, the industrial market has always been kind of deemed as the, kind of the boring segment within real estate, and you read a lot of reports now that that's really the hot spot now, and you're in fact seeing new development and speculative development of industrial space, which is really interesting. So that seems to be one of the new hot spots in the market. Retail might be one that can be a little softer right now. That's a tougher segment for a lot of folks, just given that the retail environment can be a little harder to gauge right now. But generally speaking, it's been an interesting market, and the valuations and the cap rates have remained very low. The valuations have remained very high, even though interest rates have begun to creep up a bit. Generally, I think the real estate market in town here locally seems to be very solid. Vacancies are low. The cap rates remain low, and you're seeing a lot of towers in the air, which is usually a good indication, not just multifamily, but also, as I mentioned, industrial and even some office, despite construction costs being so high. That's just a gauge on demand and certain usability of a facility that certain businesses need or desire. So it'd be interesting how this plays out. Again, the real estate market changes very quickly, but I say in the near term, things do seem to feel pretty solid on the real estate front locally.
Jeff, we hear a lot about interest rates. How do interest rates affect today's business owner and the company?
Well, it's a rising interest rate environment, and we've been waiting for years and years for the rates to finally creep up. It seems like we're finally there. Obviously, the Fed has raised rates a number of times, so the short-term interest rates have come up incrementally. The long-term rates have been a bit slower to follow. And you hear in the news about the flat yield curve, or potentially at some point inverted yield curve, and how that might impact the economy, et cetera. So the short-term rates have come up. The long-term rates are slow to follow, but have crept up a bit. We usually price our fixed rate loans off of a specific index called the Federal Home Loan Bank. Mm-hmm. And those rates oftentimes are in line with the Treasury rates. I don't think that the interest rates have necessarily impacted business owners' borrowing decisions. I think they're more aware that the interest rates are now an issue. For a decade, they were really not as much of an issue because they were so low and remained low for so long. So it's calibrated into the decision making. I think they're aware that perhaps if they were to make a decision for the long term, that now might be an appropriate time to do that if they are concerned about a rising rate environment. The thing that the bank we've seen, additional pressure on us is because now with the interest rates increasing, the deposit rates have begun to follow as well. And those rates for years were very low on CDs, money markets, savings accounts, et cetera. Those rates have also begun to increase, so we've seen competitive pressure on that front. So it's really back to the basics in some respect for banking. Deposits, hedging interest rate risk, diversification of deposits. Really interesting how these things oftentimes come full circle. But there has been additional focus and attention paid at the bank to make sure we're in line with the competition on the deposit rates. Again, it has not been an issue for many years, and now is a focus for not only us but the clients and prospects that we're meeting with, because hey, there's more competition on the interest rate side, and we'll see what happens with the long-term rates. But again, I think in general terms, it's a rising interest rate environment, and we're all going to have to just monitor how this plays out.
Thanks again, Jeff, for sharing your time and experience and expertise with us. You've helped our clients for over 12 years. If you'd like to learn more about Jeff Campbell and Fidelity Bank, feel free to reach out to him. Thanks again for joining us for today's episode of the Rock Island Wealth Management Spotlight. If you'd like to learn more about us, please feel free to contact us. Have a great day, and as always, keep smiling.